the majority of Tesla investors are undoubtedly on the verge of dumping their holdings at the first opportunity given the rate at which the company's stock is declining, since there are several potential catalysts that could raise the stock price this year. The majority of investors anticipate a positive cycle in the stock's value, although investors are worried about the ongoing decline in Tesla's stock price. Technical analysis specialist Imprint Newton has stated that further declines are likely to occur, and that the stock still can't seem to reach an almost impossible position. What does this mean for Tesla's investors? Hi everyone, welcome to Tesla Tomorrow again. A few occurrences that have come to light in recent months have negatively impacted Tesla stock. There are a few instances to note even when there isn't a clear explanation for why the stock is selling below its true value. First, as Elon Musk concentrates on the newest company, the likelihood of operational errors at Tesla has increased. The second factor is the increased rivalry in the EV market, both locally and abroad, which has gotten more intense in recent years and increased the possibility that Tesla's progress in 2023 will be slowed. Then, in the midst of an unclear post-coronavirus trajectory, there are worries about manufacturing problems and the rate of Tesla sales in China. Despite these concerns, Imprint Newton, Fundstrat's technical planner, continues to hold the view that Tesla has not yet plummeted to its lowest point. He claims that most financial supporters have learned from earlier experiences that purchasing their preferred stock simply because it is trading at a low price is practically an oxymoron. For what reason did Imprint Newton say this? Let's solve the problem. However, before we do, please remember to hit the like button, subscribe, and enable notifications if you enjoy this type of content so that you may be informed about anything related to Tesla. The imprint, according to Newton, a stock strategist with Fundstrat Global, investors should not place bets on a short-term recovery of Tesla's price because it has stagnated. In an interview with CNBC, Newton stated that Tesla's price has obviously collapsed and that investors with intermediate-term financial commitments must climb above the area where the stock broke. Newton said that he understood that financial backers couldn't truly expect Tesla's stock price to just double in order to return to these levels. He went on to say that the stock had only begun to decline roughly 2 months prior, suggesting that fundamentals were still weak and that a major recovery is unlikely in the foreseeable future. According to him, the most common misunderstanding on Wall Street is that buying dips on something that is 50% lower is always a good idea. If 2022 has taught us anything, it's that a bear market isn't always a good time to invest. He thinks it's too soon to consider that level at this time, but it might have a very sharp rebound, even though Tesla is currently selling at levels that might not be consistent with its fundamentals. Imprint Newton thinks that opportunities to purchase will still arise. He added that although Tesla is a very solid firm, some investors have lost faith in the stock due to market volatility and a number of other factors. Analysts predicted in November that Tesla would drop considerably farther from its present price and possibly reach as low as $109 per share. The technical downside was about $165 a few days ago, but in a worst-case scenario, the EV creator may approach $109. In addition, Newton said he anticipates the carmaker selling off between late December and March to May. The technical planner predicts that there will be a significant fall, far greater than most people would ever believe is feasible. According to him, Tesla's stock has been abnormally weak in recent months. Therefore, it is clear from this that the price supports this fresh breakdown. Though some investors could be alarmed by this, it's wise to keep in mind that this might be the same purchasing opportunity Newton mentioned earlier. According to Newton, if Tesla stock drops by about $100 before the month is out, there will be indicators that the company is a trading buy and may rise sharply. The imprint, according to Newton, Elon Musk has relatively little influence over the daily performance of stocks. While that is somewhat accurate, it's also crucial to keep in mind that when Musk sold Tesla stock, the shares occasionally fell. Musk tweeted in 2020 that the price of Tesla stock was too high. Prior to Musk's tweet, Tesla stock was trading at about $760.23. It subsequently dropped to a session low of about $717.64 before dropping much lower. In a similar vein, Tesla stock fell precipitously between December 12th and 14th of last year, when the CEO sold off 22 million shares, valued at over $3.6 billion based on SEC filings. In November, Musk said that he had sold an additional $3.95 billion worth of Tesla shares, which caused the company's stock to plummet to its lowest point. in almost 2 years, Musk therefore has some influence over the stock even though he may not be a direct factor in determining its success. It is premature to believe that Tesla has hit its lowest point, according to Imprint Newton. He believes that the stock will not hit its lowest point until April or May. It is anticipated that Tesla stock will rise and then fall later in the year if this is accurate. However, by then, investors could also wish to start with the basics. In a recent message to clients, he also expressed his belief that Tesla's Q for outlook is getting better. He claims that in addition to other worries, the latest sell-off has been fueled by real negative developments, such as Tesla's December market share and demand in China. The Q for figures by themselves, in his opinion, are unlikely to settle everything. Additionally, he thinks that the declining sentiment is a result of a lack of awareness on important acknowledged factors, such as the forecast for the 2023 auto gross margin, delivery and production outlooks, and the product rhythm for new and updated vehicles. He went on to say that these elements, together with Tesla's Q for earnings and investor meeting, might truly bring much-needed clarity and visibility to these issues. That might be enough to give at least a short-term lift to sentiment. Other businesses are also changing how they view Tesla. Edward Jones, an American financial firm, has upgraded its hold rating on Tesla stock to buy. Jeff Window, a business analyst, thinks Tesla will be able to fully capitalize on this growing market with the introduction of new products. In a letter to investors, Jeff said that the company's long-term growth prospects are not reflected in the share price of Tesla. Edward Jones added Tesla to its core list and upgraded the stock from a hold standpoint. Edward Jones also said that global pollution and fuel economy requirements are fueling the expansion of Tesla's EVs, notwithstanding the financial challenges now impacting the company's near-term auto sales. Additionally, they anticipate that Tesla will maintain its dominant position in international markets despite growing competition. Additionally, Jeff acknowledged that the stock gain in prior years has been appealing. However, the opinions of its financial supporters ultimately determine whether Tesla is able to sustain a sizable market position in EVs and whether its new initiatives are successful. Offerings from Tesla are substantial and unaffected by the price of the company's stock, despite the company's excellent fundamentals. It is only to be expected that investors will want more from its stock. Financial backers, however, must exercise patience and maintain optimism over Tesla's stock price performance, because the stock is being controlled by variables other than the company's performance. Newton believes that before the end of the month, when Tesla reports its fourth quarter earnings, there might be a chance for investors to purchase stock. He noted that if the price dropped 10% in January, it might be responsible for a 30% to 50% recovery, despite the fact that there is still short-term fall ahead. Newton seems to think that some investors, particularly those who are not making long-term investments, would be deterred from selling their shares in Tesla by the company's results call. At the end of the month, there are a number of things that might accelerate Tesla's growth this year and boost investors' trust in the automaker and its stock. It's possible that Tesla will reduce selling prices without compromising profit margins. In the same vein, it can raise car pricing while still experiencing a rise in demand for its electric vehicles. This is one of its most important competitive advantages over other EV manufacturers. Do you think the price of Tesla stock will drop to its lowest point ever? Tell us in the comments section below. Tell us what you think of Tesla. Feel free to click on the next video that appears on your screen if you want to learn more about what Tesla has been up to in recent days. I'll see you there.